It's a very volatile start to the year. Welcome to Kitco Roundtable here at the BMO Mining and Metals Conference in Hollywood, Florida. I'm with Paul Harris. Paul, great to be doing this with you live again.
Likewise, Michael. Good to see you in the flesh.
And we are with another Paul. That's Paul Cronin. He is CEO of Adriatic Metals. Paul Cronin, welcome to Kitco.
Thank you very much. Good to be here.
Thumbnail Adriatic Metals for us. You're a happy person because you're close to production.
We are. We're about 6 months out from production. We're a European silver and zinc producer, or will be in a few months' time. Our project is primarily in Bosnia and Herzegovina. We're a London-listed company, but also listed on the Australian Stock Exchange. The company's only new. We founded in 2017, but has made a lot of progress in a short period of time. And we're very, very pleased with the rate of progress and the fact that by the end of the year, we'll be producing free cash flow. So very happy.
Let's talk about precious metals and that volatile start to the year. Now, Paul Harris, we started the year at a raring pace. I think we hit about 1930, 1960 gold as a high. Since then, we really see things that have come off right now, and that has to do with the economic reports. We saw the strong jobs report that we had. We also see that inflation is not coming down that low. Talking to macro analysts at the show that was preceding BMO, and then that was Frank Holmes, that was Bloomberg's Mike Magone. They are talking about short-term pain right now. They're saying that you're going to continue to look at softening metal prices. I should rather say softening gold prices, but in the medium to long term, we're going to see something. But it's a very interesting backdrop to this right now because this is really the heart of the mining conference season. You see people that would have been doing all of their training, all of their booking into 1930. And then at this point right now, we see a real softness, and we also see a softness coming on the GDX.
Yes, I think coming into the BMO event specifically, gold's been on a 4-week losing streak. But $1,800 per ounce is still a very strong gold price. A lot of the people I've been interviewing here for Kitco have been saying, look, the past few weeks have perhaps been a little bit painful, but the companies, the producers are still, the margins, they've probably got 40-50% margins. A lot of them have an all-in sustaining cost around $1,200 gold, so they're making a lot of money. They're cleaning up their balance sheet, they're returning capital to investors. So when they're all said and done, gold and the gold space is in a pretty healthy zone right now.
Now, Paul Cronin, I imagine you've been doing so many reports and quantitative analysis when you've been getting up close to this as well. So, these small changes in precious metal prices, they can just have a real outsized impact upon the margins within producers.
They can, but I think if you look at precious metal prices in producer currency terms, if you look at it in Australian dollars, Canadian dollars, those prices are still very, very robust. And, as Paul said, even in US dollars, they're robust. We sort of look at commodity prices across the spectrum. We're in the middle of a build, we're in the middle of a $200 million build out. We're really interested in where things are going. The strength of the US dollar has actually helped us quite a bit because we're buying services in euros, in Australian dollars, in Canadian dollars, in South African rand. And I think that, over the next few months, we're going to continue to see gold and silver hold steady. I think the market's looking for some sort of direction there. And if you think of precious metals as being a natural inflation hedge, you would logically think that if inflation remains high and interest rates continue to increase, gold and silver will eventually, increase with it. So I think we're in a really interesting market. It's going to be very interesting to listen to the European Central Bank, Bank of England, Federal Reserve in some of their comments over the next few months to get an idea of not just generally where the economy is going, but I think more specifically where we think precious metals are going to go.
I think another couple of aspects on that, central bank buying has been increasing. And as the year starts, the gold producers release their reserve and resource estimates, and they've been bumping up their price they base their calculations on. So Barrick Gold, for example, increased from $1,200 per ounce to $1,300 per ounce. Other companies have increased to $1,400 per ounce. And the message there is that higher prices, their higher input costs are basically here to stay. So they're bringing up their reserve price estimates to reflect that reality.
You kind of mentioned kind of a bugbear about me because, I hear again and again from a lot of the gold producers, the people that are gold juniors, and they're talking about central bank buying. But, you're kind of talking about outliers that are actually doing that. You're talking about your Chinas, you're talking your Turkeys or Polands.
I'm not expert enough in this to really sort of perhaps give a really sort of detailed opinion, but I think a broader context, that the geopolitical situation is rapidly perhaps dividing into a sort of them and us. The era of globalization where everybody's friends is perhaps coming to an end. And so perhaps as part of that, you're seeing governments that don't necessarily align with the West perhaps not being so comfortable holding US dollars and wanting to convert those US dollars into something that they are more comfortable holding in. I don't know, Paul, maybe you've got a more informed opinion on that than I.
I don't know, I've got observations. I mean, my observations, even when I think back to the financial crisis back in 2008, was there was a general expectation that the US dollar was going to get smashed. And the exact opposite happened. And when we've seen sort of the Ukraine crisis recently, the US dollar has gained strength. It's a point of safety. What we are seeing on the ground is, our functional reporting currency is US dollars, even though we're a British company. We are seeing our suppliers wanting to be paid in US dollars. And so we're constantly looking at how we hedge out our US dollar euro exposure. And I think we're going to continue to see the US dollar as a point of safety. I think as inflation starts to stabilize, interest rates are obviously going to have to come up. I think everyone's pricing that in now. We will start to see more money move out of the US dollar and into hard commodities. And I don't think, we're likely to see, China start getting rid of its US dollars. What we're going to see is China use the US dollars it's got and convert that into hard currency. And I think that's a really positive thing for both gold and silver.
I want to shift the conversation to critical metals, which is the second big theme that we're seeing out of the mining conferences and the mining season right now. But first, I want to take a break and hear a word from our sponsor, Snowline Gold. Snowline Gold, ticker SGD on the Canadian Securities Exchange and SNGF on the OTCQB, is a Yukon-based explorer with one of the territory's largest mineral portfolios amassed privately over 3 decades by prospectors Ron and Scott Birdall. Snowline is going big. They're focused on their district-scale greenfield gold discoveries, and they're well-positioned to find world-class gold deposits. The team made 2 significant discoveries in their first year, including the Valley Zone on their Rogue project, a near-surface high-grade bulk tonnage gold system with drill intercepts of up to 319 meters at 2.5 grams per ton gold from surface. With 8 projects in the Yukon and over 30 priority exploration targets, Snowline is just getting started. The company is backed by some of the best. Significant shareholders include Keith Neumeyer, Eric Sprott, and Crescat Capital. Snowline Gold is a unique opportunity for investors to be part of a multi-discoveries and the creation of a new gold district in one of the world's most desirable mining jurisdictions. Learn more at snowlinegold.com, ticker SGD on the Canadian Securities Exchange, and we thank Snowline Gold for their support. The other big theme of the conference has been the rise of critical metals. BMO has gone so far as they've actually changed the name. And I'm going to have to note this here. It's been renamed to the Global Metals, Mining, and Critical Metals Show. Before this, I was at the Mines and Money Miami show. We saw, how would you say, there was less booths for the precious metal juniors, but we saw the places that have been taken up by the critical medical companies. We saw the big news that was from January, and that was the GM has actually invested $650 million into Lithium Americas. We hear at the BMO conference right now, there's actually automakers that are in attendance with us. There was also Sigma Lithium that was looking at, there was reported by Bloomberg that there might be a takeout of Sigma Lithium in Brazil by Tesla, looking for sources of lithium. But also the surprising news that came out of the show, Paul, was the announcement that McEwen Mining had. Yes,
yesterday McEwen Mining, specifically McEwen Copper, announced 2 investments into McEwen Copper. $30 million from Nuton, which is the Rio Tinto technology company. Nuton had already invested $25 million. into the company last year. So the real big story was Stellantis investing 30 billion Argentine pesos into McEwen Copper, which is equivalent to about 150, 155 million US dollars. They're going to end up with a sort of circa 14% stake. And we've seen in recent months, and you mentioned GM, that Ford's done this as well, Tesla's done this as well. They've been starting to invest in critical metals companies, lithium companies, cobalt companies, and perhaps nickel as well. So they recognize that there's going to be a supply shortage. They need these metals. They're essential for what they do. So they want sort of first dibs on them. So they're putting their money in their mouth to help the production of these metals advance. Up until now, there's been an absence of that kind of activity in the copper space. So I think this is quite a notable deal from that point of view. It's the first time an automotive company has been investing directly into a copper development project.
Yeah, and let's just kind of emphasize that point as well. It's copper, whereas you have lithium, for instance, and these are very much kind of specialized companies. They're more chemical companies than they're actually mining companies. Whereas copper,
I think the driver's the same, Michael. There's, automotive companies are concerned about their supply of lithium and cobalt, perhaps graphite's coming as well, of nickel. Copper's in the same basket. The copper market this year is, instead of being in a forecast surplus, most analysts are now forecasting it's going to be stable. It's going to be at parity. But going forward, copper's going into a big supply deficit. And so a gasoline-powered car today has far more copper in it because of all the electronic gadgets than a car did 5, 10, 15 years ago. Electric vehicles have even more. So the car companies are perhaps starting to wake up to the fact that it may be harder and much more expensive to get the copper they need to put into their vehicles tomorrow. And so perhaps it behooves them to start placing their bets on development projects to ensure their supply today.
Now, Paul Cronin with Adriatic, you're a polymetallic, but silver is at the fore right now. So I take it, silver's kind of has a foot in both camps, sometimes as a precious metal, although when I'm looking at the silver producers, the silver juniors, they're certainly talking up the critical metal components. So has any automakers been knocking on the door right now with Adriatic?
No, we don't have any automakers knocking on the door, and I'd be very surprised if they did. When we look at some of these deals, sort of seems strange to me. Is it a price hedge? Are they trying to just inject more capital to increase supply? What is the rationale there? I don't really follow it. I mean, even if you look at big EV car producers investing in lithium mines, I don't see how that makes sense when there's so much downstream processing that's got to be done before you can get hold of that product. So I don't think it's about security of supply. I think it's just a purely economic investment in vertical integration for these producers. For us, silver is it's an interesting commodity, right? It's always traditionally had a very precious metal sort of feel to it, but in the last few years, we've actually seen the industrial uses exceed the jewelry, the currency purposes for silver. I mean, we all love silver. It's a beautiful metal. I still buy my mother a silver photo frame every Christmas, and every year there's another photo of my brother on the mantelpiece. But if we look at where that is going, it's quite fascinating. We're starting to see a lot of silver come through in photovoltaic uses in solar panels. We're also seeing silver being used a lot in EV charging because it's highly conductive. I think it is the most conductive of all metals. It's highly malleable, so you can put it into various uses. We're seeing it expand in its uses in pharmaceuticals. We're seeing it expand in its uses in cosmetics. But it's a really interesting commodity to see that shift from that industrial to precious metals usage. And I think we're going to see that continue to evolve. What we are seeing is silver demand continuing to increase. And silver is primarily a byproduct of other metals. So, you can see that we're going to see, increased lead production, which will drive increased silver production. We find a lot of zinc mines are producing silver as a byproduct. For us, our primary contributing metal to our revenue line is silver, closely followed by zinc, then gold, lead, copper, and antimony. But I do think we are going to see dedicated silver miners continue to receive a premium from the market, because there is a view, I think, that as we see more inflation, as we see interest rates go up, precious metals and the value of precious metals will continue to increase. What we are also seeing is a huge reduction in silver inventories. London Vaults, COMEX, these inventory levels are the lowest we've seen, since reporting started on those. So something's happening in the silver industry. I think it's probably the increase in industrial demand is drawing down on existing inventory levels. And yet we're still seeing the normal level of precious metal demand, but we're not seeing an increase in price, and we're not seeing a major increase in supply response. So again, I think we're going to find that silver is going to be quite interesting in terms of the way that price evolves over the next couple of years. I think it'll be driven by two things: macroeconomic factors, as well as a massive surge in industrial usage.
We could perhaps dive down a rabbit hole about paper trading and inflation. But no, Paul, I want to sort of push back on one of the things you said. Yes, there's a growing universe of infrastructure around sort of downstream battery production, but I think there's a growing realization that you actually need something to put into those plants, and that's where the alarm bells have been going off, because the junior lithium developers, or whatever the metal is, they're crying out for finance. Where are we going to get the money from to build these things? And the battery companies and the automotive companies have suddenly realized, well, if these guys aren't financed, we may be able to build a battery plant in a year, but it takes 2 to 5 years to build a mine. There's something that needs to happen to actually make sure we've got something to put into our battery plant to get a battery out of the end.
Yep.
I think that's the key driver there.
Yes, I think mining companies have got to start thinking well ahead in how they're going to do this. The big industrialised, diversified players, the majors, BHP, Glencore, Rio, are thinking decades ahead in where their new supply is going to come from. The mid-tiers and the juniors also need to think about how they're going to finance that exploration. And what we're not really seeing is a huge uptick in exploration activity, particularly in base metals, but also in precious. And exploration is high risk, it's expensive, and people expect a return from it. There is, I think, a decreasing appetite in that risk. We see a lot of people say, well, it's because of ESG concerns or sustainability concerns or NGOs that are very more active. I think that's totally within mining companies' control about how they go about managing those risks. At Adriatic, we work with our NGOs, we work with our environmental NGOs, because these NGOs aren't anti-mining. They've got concerns about a specific issue. Is it air quality? Is it water quality? Is it education? Is it community sustainability issues that mining companies have got to try and understand, and we've got to try and work with those NGOs to define our projects in such a way that help manage some of those risks, or what they perceive those risks to be. And if we can do that very effectively, then I think we are going to see an inflow of funding into exploration eventually, which will ultimately lead to a pipeline of potential projects that are going to deal with those major supply issues that some of the end users of our metals or our products are trying to address themselves currently.
Now, Paul Cronin, you have another hat where you do some policy help for Europe just around mining policy. I was trying to get a feel on where Europe is right now with an embrace of mining. It's easy to kind of understand in the US because you can always put it in a bucket. You can kind of put it into pro-business and then the government, it always kind of shifts back and forth. But you're talking about the entire EU with all of those different countries and all of those overlapping jurisdictions. You are close, 150 kilometers from Jadar, which unfortunately went south for the large lithium project over in Serbia. But where is it right now? What would you say?
Look, generally, I don't think you can look at Europe as a jurisdiction, or even countries within Europe as a jurisdiction. You've got to look far more local than that, and you've got to look at specific communities as to whether they're going to accept mining as an industrial activity within that community. Generally, I think European policy is shifting, and we've seen that shift over the last decade or so, but we've literally really seen it surge since COVID, where we had real supply chain issues. That's been then further exacerbated through Ukraine. And we are starting to see European governments and the European Union itself start to evolve its policy formation around critical minerals. Now you've got the Raw Materials Initiative in Brussels. You've now got critical minerals lists that pretty much cover every element on the periodic table. But what it's clearly saying to us is that we, as end users in the industrial centres of the world, which is Europe, US, China, are starting to look at securing their own supply chains. And, you're never going to see German car manufacturers go and invest in aluminium mines or iron ore mines, but they are going to start looking at how they develop those supply chains to ensure that not all of the product they need can be supplied from within their nearshore communities, but they are going to look at how a proportion of it can be so that they can minimise disruption. And if we look at, we're producing a zinc concentrate and a silver lead concentrate. All of those concentrates are destined for European smelters, and we're essentially being paid a premium for them because the source of that is Europe. So that sort of starts to show where, the market is evolving here. And I think governments are certainly starting to respond, but business and investment will respond faster. It always will. We're always going to be better at doing these things than governments will be. And whilst we might see a more open attitude to mining in Europe, and it'll be very jurisdictional. I mean, Spain's a big mining centre, Finland's a big mining centre. These countries have very evolved mining codes that mean that mining can be done in a very practical and safe way. We'll start to see that spread. Certainly in Serbia, we're seeing a lot of activity. Zinjan mining have taken over the Bor complex. You mentioned Yada. I don't think we've seen the end of the Yada project by any means. We know Rio Tinto is still very active there. I think governments have got to sort of play a very delicate balance between, political activism, which they have to manage in their own political forum, and economic common sense. And economic common sense says you should build the Yada project. Right? You've got the biggest EV car market at the doorstep of Serbia. If I was the Serbian government, I'd be proceeding with that project. And I think we are going to see this continue to evolve in the way we're thinking. We're going to see our supply chains start to develop in such a way where we get more comfortable with the source of our supply. And it's not just about security, it's also about sustainability. We want to know that the product that we're buying, that goes into the product we use, has been sourced sustainably. And we are seeing higher levels, higher standards being deployed, particularly in Western jurisdictions, where we are looking at how we do things. We are making sure that the environmental considerations are at the forefront of what we're doing, that the community considerations are at the forefront, that we align our projects with the community's aspirations. And that will continue to allow us to go to new jurisdictions where traditionally projects have not been well accepted, and be able to edge them forward. And I think, as part of the cost of new metal development, we've got to really start thinking more about, how do we want to design this? We're not going to design it for maximum profit. We're going to design it for the right balance between shareholder returns and sustainability considerations. And I think that is working alongside, new policy formation around critical minerals and critical mineral supply, that will see a number of new mining projects within Europe and nearshore to Europe get off the ground in the next 5 or 10 years.
Paul Cronin, I want to bring back the conversation to Adriatic Metals and talk about, again, fill us in when production is going to be. What are the milestones for getting there?
Yeah, at the moment we're targeting September for the commencement of commercial production. We've also, in parallel to project development, which has gone really well considering the inflationary firestorm that we've been in, we are going to come in slightly over budget, but only very slightly, and we're broadly coming in on time. The heat out of, or the criticality out of the supply chain sort of started to fade away a little bit following Ukraine. But For us, we've been working on exploration in parallel to all of that development work, and that's yielding some fantastic results. I mean, we are seeing what will ultimately be a large expansion of our resource and reserve, and ultimately extension of our mine life. At the moment, we're forecasting a 10-year mine life, and that was based on our definitive feasibility study. That definitive feasibility study was based on a mineral resource estimate that we did in 2019. We've done tens of thousands of metres of drilling there. In the last 12 months, we've drilled about 30 holes. 29 of those have hit massive sulfide mineralisation. So we are starting to see that really generate. And I think late in Q2 or early Q3, we'll put out an interim update on our resource. We'll do reserves shortly after that. But I think the key thing for us is that we've just got to finish this build, which is going exceptionally well. I'm really proud of what the team is achieving over in Bosnia. We're a very young team, but the guys are learning fast and they're getting the job done. So I think Q4 for us this year is going to be a transformative period. We're moving from we started as explorer in 2018 to developer in 2022 and producer in 2023. That's a pretty rapid time frame.
I'm sure all the concentration is just getting to that point, but you're going to be a different beast once you're producing. What's the next plans for Adriatic?
Oh, look, I think we will continue with our exploration program. It's yielding such tremendous results, and that Rupice deposit is absolutely fascinating in terms of it just keeps giving. Every time we think we've tried, we've understood it, we find something else that opens up another avenue of geologic modelling, which our exploration work confirms. I think what we've got to do is now, bed down our production, get that streamlined, get that as productive as possible. But it's not going to be too long before we've got to start thinking about what the future for Adriatic Metals holds. In our first 3 years of production, we'll produce over $600 million in free cash flow. We've only got a very small debt to repay. So logically it says, well, do we do return to shareholders or do we go for growth? And I think, my view and the board's view is that we're going to go for growth. I think we're going to see an opportunity to pick up projects where we can take our brand of mining, which is highly sustainable, highly focused on local issues, apply that to projects that have been through evaluation phase, that have established resources, and take this very young but now very experienced project development team and say, right guys, do it again. And I'm looking forward to that. I'm looking forward to that challenge. I think it's pretty exciting times for the company in the next few years. And we're looking forward to being a multi-site, homegrown European producer of metals that Europe needs for its transition.
Paul Cronin, thanks for speaking with myself and Paul Harris.
Thanks very much, guys.
Paul Harris, I look forward to doing this with you again sometime. I don't know where, I don't know when, but sometime.
It will happen.
My name is Michael McCrae with Kitco Mining here at the BMO Mining Conference.